A CPI day, the most important day of the month as far as economic numbers out of the US. I've talked about it in a gold, silver and WTI crude video that I've just posted. So please have a look at that if you haven't seen it. I'm going to talk about currencies now. The dollar index has been really confusing. Dollar has been in a really good bull trend. Then we started seeing a correction from October. The market plunged. I was looking for this bull trend to resume because this is a declining wedge pattern, which is usually quite bullish. The breakout above there, especially with such a strong green candle here, indicated to me that the dollar really should take off. Then we just paused. Finally, then we did start to move higher, but we were caught by the blue 100-day moving average, and then the price just reversed. So then I thought, oh, we're going to continue this bear trend, which started at the end of October last year. We're going to continue down. We've held the 100-day moving average. We're back below the 50. I just thought all of this was quite negative. We'd failed to continue higher after the breakout of the declining wedge pattern. However, we then found a low not far above the previous low in February. So what I'm deducing from this is that actually we're probably establishing a sideways trend. Sideways trends are probably the hardest to decipher because you have to wait quite a long time before you know they've been established. For example, this has been going on all of this year. A little peak here in January, a low here in February, then a peak in March not far above the January high, and then a low here not far above the February low. So it's really only that low that we had beginning of April that has now allowed me to understand that the dollar is probably establishing a sideways range. But of course, it's taken 3 months for me to actually be able to establish that fact. You can see that the 50-day moving average is flatlining. Now the 100-day moving average is probably starting to flatten out as well. The 200 has been flat for all of this year. The 500 is flat. So all of the moving averages flatlining. Eventually they'll all converge. This is what happens in a sideways trend. They all end up meeting at the same price point. But of course, that's going to take several more weeks or months before that happens. I don't like trading sideways markets. It's much more difficult to find tradable levels. But the risk is that this goes on through to June and we just keep trading within these parameters. It's going to be more of a scalper's market than a trending market where you can put on swing trades and leave them. Just to back that up, the Aussie really hasn't been trending in any particular direction. We did have this move up, obviously, from October to February, but over the last month, we've really just traded in this sideways direction, stuck in a range. Again, look how the moving averages have flatlined and they've all converged. I talked about how that's probably going to happen with the dollar index. It's already happening with the Aussie dollar. This just confirms the fact that there is no clear direction. So again, really is a scalper's market. I'm obviously going to continue to find trading levels through the short-term charts, the 1 hour and the 4 hour each day to find a potential trading opportunity. New Zealand dollar versus the US dollar has been in a very clear sideways channel since November. Difficult to trade. Again, moving averages on the daily chart flatlining. We go up for a day or two, then we go down for a day or two. If you are a swing trader, then it's horrible. You literally cannot hold a position overnight. What I'm trying to do is just warn you here. Don't be looking for big moves in the market. Traders often think that prices either go up or they go down. But most of the time, more than 50% of the time, markets do actually trend sideways in a consolidation. And again, dollar yen, look how this is flattening out. Trade the channel. Look at the trend lines that I've got on my chart. The 200-day moving average flatlining. The 50 is already flatlined. The 500-day moving average is climbing, but only very, very slowly. When I scrunch up the chart, you can see that really this is a sideways channel, and all we can do is trade the trend lines and then wait for the breakout. The moving averages are far less effective when markets are stuck in sideways ranges, but we should have resistance up around the 200-day moving average and the trend line up here, but we're several hundred pips away from that. So that's not particularly relevant. Got to wait for the breakout or just trade the trend line. So you've got to be very patient. Here's another example, Canadian dollar versus Japanese yen, establishing a sideways trend since December. So again, we've just got to trade the trend lines. You've got to really sit in your hands, wait till we reach the extremes of the channel and then enter your buy around the lower trend line or your sell around the upper trend line. Euro yen in a channel for a long period of time. We've been going sideways really since June of last year. Look how the moving averages are flatlined there. They've converged, all heading towards the same price. As I told you, this is what happens in a sideways trending market. But we have just broken above the upper trend line, so there is some hope for bulls. I'm not so sure this bull run is going to last for too long. But let's see if the euro yen can at least test the December high at 146.72. We may even get to 48.40, which is the October high and obviously the high of the recent range. US dollar versus the Canadian dollar, also very established sideways range, as you can see from my trend lines. Moving averages all converging towards the same price, flatlining. We're seeing some resistance from the 100 and the 50-day moving average. But what you tend to find is initially those moving averages will hold the holders support and resistance levels, but then they just get blurred and ignored the longer you stay in a sideways channel. The pound versus the US dollar had looked like we were breaking up. We broke above these previous highs. You can just see how when we broke above there here with this nice big green candle, I thought this must be a buy signal, but look, we didn't. We just turned around and drifted lower, really slow move down. So now what can I deduce from it? Well, it just looks like cable is now stuck in this sideways channel. Again, moving averages on the daily chart, flatlining, indicating that there is no up or down trend. We're just going to trade sideways. The problem with these channels is they don't nicely hit the upper trend line and then go straight to the lower trend line. Well, here we did actually go almost straight to the upper trend line, but you can really spend long periods of time within that channel finding other short-term sideways trends. So it's quite difficult. You really have to focus on the 1 hour and the 4 hour charts. And I'll do a video of that beginning of next week to show you how to trade on the short-term charts when you're in this pattern on the daily chart. So I hope that's at least helped you move away from swing trades and understand that the conditions are changing and that we could be in these sideways channels throughout most of the summer.